Uh, Good morning, good afternoon, and good evening to my viewers from wherever you are in the world. Welcome to this particular video where we will be discussing about how to trade my daily signals that I put up on my blog daily. So, this is a trade which happened on the 24th. That was last Friday on the Euro JPY pair. You can see it as a 5 minute candlestick chart, and a lot of things are actually drawn on the chart. To start with, let me explain to you these two vertical lines, what they depict. This first green vertical line is actually the time when, or around, approximately around the time when I actually give out my signals every day on the blog. And this brown vertical line depicts the the London, the Europe market open, and so those are the two vertical lines. And then we have horizontal lines, as you can see. One is a blue line, and the others are all red lines. So these are all, of course, the levels which get sent every day. The blue line depicts obviously the buy level, you can see over there. The red line is the sell level, and TP1, TP2, 3 and 4 for the other lines. How do we trade my signals? First of all, what I would like to add at this point is, right at the beginning, I want to inform you that these lines, the buy and the sell levels and lines that show up on the chart, are extremely powerful support and resistance lines for the day. They are very powerful and have tremendous amount of confluence when price comes around those areas. So we'll see how the trades went for this particular day. We'll start off with the first trade that happened just at the beginning of my call. Now you can see that around the time when I sent out the signal, price had already gone below. This is actually a red bearish candle, which is not exactly, it's not clear because of this vertical line, but it's actually a bearish candle over there, which has already got triggered by the time I had sent out my signals for the day. So then what would you do? I mean, how would we trade then for the rest of the day? Well, the answer is very simple. What we do is we wait for price to enter back into our consolidation zone area. Now the consolidation zone area is defined as nothing but the area between the buy and the sell levels. So we waited and waited, and the price eventually got into the consolidation area and then formed a price action over there. You can see inverted hammer, almost an inverted hammer getting created over there at the top in the consolidation zone. And then you see this bearish candle giving confirmation that the price is going to go down, but we are not into the trade yet. Remember, if you had gone through my blog and gone through the illustrated post where I had clearly showed you with charts as to what or at what point you would be entering and exiting, so that if you had gone through that, you would know very well that we would only be entering the moment price hits the buy or sell level from inside the consolidation zone. So in this case, we would have entered at this particular candle when this particular candle came down here and hit the sell level, that is the sell line. We would have entered right there. After entering, the basic idea behind how to manage the trade would start from the point where the price has hit the sell line, and then you start to manage the trade right from there using price action strategy. So you can see that the price has hit there, and then as soon as the price hits this red level, the red line that is, or the sell level, we will obviously be entering. The moment we enter, we will put our stop loss right over there on the blue line on the opposite end. So this is our stop loss, this is our entry. The only thing that we have to do right now is keep on monitoring the charts and managing the trades using price action to see where this price action actually goes, whether it goes in favor of us or goes against us. If it goes against us, we will obviously be stopped out right here. We have a stop loss in place. But if it goes in favor of us, we have a chance of making TP4 or a good amount of profit. So in this case, as it happened, the price came down and tested the resistance level over here. You can see that it tested once here. It actually tested here as well. It tested over here twice. It was not able to break it, and then there was a gap down, and the price just kept on falling, as you can see over here. So the moment it came down and hit this first TP level, we would have closed our first lot. Remember, we enter with 4 lots, that is 0.04 lots, or depending on your risk profile, you would be, and your whether it's a micro lot or a mini account or a micro account or a standard account, depends on that as well as to how many lots you will be putting in. But the standard is 4 lots get entered the moment the buy or the sell level gets triggered. So in this case, we have 0.04 lots. As an example, I'm just giving you that. So when it hit this first TP1, you can see that this particular candle, it's a pretty huge bearish candle that came down and hit the TP1. The moment that happened, we closed 0.01 lot out of the 0.04 lots that we initially entered right over here. We closed 0.01 lot the moment this TP1 got hit. And then the next thing that we do is we move our stop loss from here, which was initially right at the beginning, from here to here. So now the stop loss will be placed exactly on this line, plus, or in this case, because it's sell, minus 3 pips. That's what my strategy says, that you have to keep, move the stop loss from the first place to the break even plus 3 pips. So somewhere around here is where your stop loss would be the moment this gets hit, the TP1. So what happens is we enter over here. As soon as TP1 gets hit, we close 0.01 lots. We move the stop loss from here to here plus 3 pips, somewhere over here, and we wait for next price action to see where it goes. In this case, of course, as you can see, the price just kept on going down and hit the TP2 over here on the same candle. Actually, it's a pretty huge candle, and came down and hit the TP2 over here. The moment that happened, we will have closed another lot, that is another 0.01 lot, and move the stop from here to here. So now the stop is over here, and we have hit TP2, and basically just waiting for the next price action to take place. And what we see is another huge candle actually that goes down over here, doesn't hit TP3, but it goes up over there and then tries to do a little bit of consolidation over there, and then and then what happens is another big bearish candle gets formed that goes and hits the TP3. The moment TP3 gets hit over here, that is the time when we will again move the stop loss from here to here. Now the stop loss is at TP2, and the price is at TP3, and we will close our third lot, that is 0.01 lot, and now we only have one remaining lot of last remaining 0.01 lot at this point. So the stop loss is at TP2, and we have hit TP3, and as you can see, it's moving down further and goes and hits TP4. Now, if you had gone through my strategy on the blog, you would have noticed that there are two subcategories or sub strategies in for the last lot. So, in other words, you can, depending on whether you want to just continue trading, uh, you have the time for the rest of the day, and you can actually continue trading. Then there is an option where you do not close your last lot at TP4 the moment TP4 is hit, but you keep it open, and the idea is to keep it open and let it run till it goes on and on and on down till, let's say, till the New York close, till such time, or if the price reverses and goes and hits TP3. This is one option. The other option with the last lot option is that you don't even wait, because you have other work to do, and you don't have time to keep on watching the charts for so long, so you just close exactly at TP4. So your last lot gets closed at TP4 instead of the idea of keeping it open even after hitting TP4 and keeping it open till either TP3 gets hit or goes down and hits ADR. And if the ADR becomes zero, I don't have the indicator right now with me, but basically what it means is, I can show you that. I can just attach it. So if the room down on the ADR indicator is zero, then obviously you will exit. Or if the room down, or if the price has gone below this TP4, and then it has it has come to the point where it is now the day's end as per New York close. So whatever price is there at the point when at New York close, that at that price the trade will get closed. Now it could be below the TP4, it could be between TP3 and TP4 at that point when the New York close happens. We're not sure, but it can also be that if you play by that strategy, it could also be that when it comes down below TP4, it might hit the room down. This ADR room down, it becomes zero. The moment room down becomes zero, the last trade has to be closed, because we are not trading anything. We are not waiting for the price to go even below the ADR zero, because ADR zero is like an imaginary value which we placed, where we think that it's not going to actually go below that after for the day. So if the price hits the ADR zero, we close out the last position. Or else, as I told you, if you don't have time for the last lot, that is, you don't have time to sit for that long, you can just continue with the idea of taking your last lot profit as soon as TP4 is hit. So that is basically how you trade uh, uh, the levels that are put up on the blog every day. And as you can see, this was actually this period between these two vertical lines, the green line and the brown line. It's actually depicting the Asian session. And for this day at least, what had happened was we were pretty lucky. You can see the price actually went and hit the TP4, gave a tremendous amount of profit. Actually, we can see how much of profit that is. And starting from here, because that's the beginning, and hitting the TP4. That's about 135 pips inside the Asian session itself. That is tremendous amount of profits actually. But if what would have happened if we had kept that last lot of open option going? Then what would have happened was it hit the TP4 over here, but obviously the last lot did not get closed, and then we were waiting for it to go even further down. It did not do that. It started to reverse from here and hit the TP3. At that, the moment it hit TP3, that last lot would have been closed. So these are the two options with the last lot. Either you can let it run, or you can book your profits at TP4. Then the UK session starts. I mean, the Europe session starts over here, as you can see, and we wait for wait to see if price is gonna go back into our consolidation zone once again for us to get a trade for our next trade for the day. And luckily, in this case, as you can see, the price actually kept on going up from the Asian session and went into the consolidation zone. And look at what happens here. The candle actually goes and hits the buy level and goes further up. Now, what my strategy says is that if the price goes and hits either the buy or the sell level, we are supposed to enter. In this case, we would have entered because price went, further up than the buy level. So we would have entered right there, and unfortunately, in this case, what would have happened is, as you can see, the price actually retraced back and then started to move down and hit our stop loss right here. So the moment we entered over here on the buy line, our stop loss automatically was at the red line over here, which is the sell level, and the price came down and hit the stop loss. So this was a loss trade. As you can see, in a few minutes time, we lost about, let's have a look how many pips we lost, because remember, when we have a loss, it usually means that we are going to close all the lots together. So that are 0.04 lots actually. So 4 into about, in this case it's 34 pips between those two lines, but then you'll have to add the spread also. But right now 34 into 4, we would have lost 34 into 4 plus 2 for the spread. So that's 138 pips we lost for in just a few moments time. But that's fine. That's how we will be trading this method, and this has been proven many times in the past that, or at least for the last 2 months now nearly, that this has been a profitable idea. So we just keep diligently and honestly applying these principles and these methods without deviating even for a single instance. We will not be deviating at all. We will be working these lines just like a computer would. That is absolutely mechanical. We will not be having emotions or anything. We will take our losses if there are losses to happen, but we will not deviate from our methods. Alright, so that was a loss of about 138 pips there, and the price hit this. The moment it hit here, we reversed our positions and we entered on the sell level again. And now, as you can see from here, what had happened, the price kept on going down and hit TP1. The moment it hit TP1, we would have closed one lot and moved the stop loss to break even plus 3 pips, somewhere over there, and waited for price action to take place in our favor. What happens? It goes and hits the TP2. We move our stop loss from here to here and continue doing this till it again hits TP4, and you could have closed it right here if you wanted to. But if you had played the last lot open strategy, you would still be keeping it open to see if it goes further down. It does actually go down further down, but I'm pretty sure by then the ADR room down would have been 0 somewhere over here in this location. The ADR 0 might have got triggered, and your last lot would have got closed before the New York close. So, so as you can see, this is how this particular strategy has to be played alongside the lines, the levels that I give on a daily basis. This is pure price action trading. You're just looking at the candles, the candles and how they are getting formed around those lines. And the moment you see good price action taking place after the trigger of an entry, you'll only be following the price action, methods that are available with candlestick formations. The kind of candles get formed after it hits the buy or the sell level. So based on that, you will continue to play it, and you will continue to manage your trade accordingly. As soon as TP1 gets hit, you close one lot, TP2 gets hit, you close another, and so on. So as you can see, this is a good example. I mean, if you had placed the, if you had not closed your TP last lot at TP4 over here, then you could have bought a little bit more pips till about here. Then the ADR room down, this ADR room down, this one would have become zero somewhere over here. So at that point, you could have you have to obviously go ahead and close the last lot. So in this case, obviously, I don't think the trade might have gone till the end of the New York session close, because it might have got triggered with the ADR zero right somewhere here. So let's have a look as to how much of profit we had made for this particular day. So remember, we are playing with 4 lots. So the first TP1, that is from the Asia session. Let's have a look. This is 132.18. 132.18 minus 131.89 is 0.29. That's 29 pips actually. So just remember that, or just write it down on a notepad. It's 0.20. So 29 TP1 is equal to 29 TP2 is equal to TP3 is equal to, and TP4 is equal to, and of course this will get repeated because there were 2 trades. So there you go. So let's have a look. Second one was 131.89. 131.89 minus 131.54. 131.54. That comes to 35. So write 35 over there. What about the other one? That's 131.18. So that's 131.54 minus 131.18. That is 36 pips. So we put over the 36 pips, and of course the last one is 131.18. 131.18 minus 130.83. So that's 35. So 35 pips. We just copy this and paste it here, and stop loss hit 130 minus 138. So what's the total? Total pips for the day. So that is let's have a look. So we have 29 plus 35 plus 36 plus 35 equals this into 2. 270 minus 138 is 132. So total pips made for the day for Euro JPY on 24th last Friday was 132 pips. Not bad. And obviously I did not take the last trade with ADR room down is equal to zero. I just took the last lot had hit TP4 and not ADR is equal to zero. If I had taken ADR is equal to zero, I would have added another 30 pips to it, but that's fine. I'm just taking a constant view for both the trades from the Asian sessions hitting at TP4 and in the UK session it's hitting TP4 again. So for the day we made a total of 132 pips on the Euro JPY pair on the 5-minute time frame using price action, working with my levels that I give. This is how you trade on each of the pairs that I give signals on, and it's pretty simple and basic. All you are basically looking for is the price hitting any of these buy and sell levels from inside the consolidation zone. The moment that happens, you enter, and then you manage the trade using price action, using looking at the candles and how they form, and their formations actually tell you whether or not it is going to be profitable for you. But basically the idea is to work your way till TP1, close the first lot, move your stop loss to break even +3, and continue doing that for the rest of the trade as long as the price action is in our favor. Well, that's about it from this video. I'm pretty sure you might have got a very good idea as to how to trade these levels, and thank you very much for watching this. Have a great day. Bye bye.